This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, July 19th, 2016. Euro dollar. So the euro continues to chop around, pretty much trading sideways over the past several sessions. At this point, a bearish bias is favored given that lower top that we've potentially seen in place at 111.87, which will be confirmed on a break back towards recent support at 109.12. Only back above 111.87 will take the pressure off the downside. Sterling dollar. So cable has entered a period of correction after recently trading down to fresh plus 30-year lows just below 128, and this correction has the possibility of extending now back towards the 120, the 130, the 138 area before the market ultimately looks to carve out the next lower top and resume its intense downtrend potentially towards next key psychological barriers at 125. Dollar yen. So dollar yen has been confined to a very well-defined downtrend, though the market could be looking to compromise this downtrend if it establishes a daily close back above some recent resistance at 106.81. A close above 106.81 could suggest that a base is in place, opening the door for the next upside extension towards 111.45. However, inability to establish a daily close above 106.81 will suggest that the market is looking for a lower top ahead of a bearish resumption back down towards those recent multi-month lows around 99. Euro Swiss. So Euro Swiss continues to be very well supported on dips, with the market supported down towards the 108 area, largely ahead of what could be the next upside back towards the range highs in the 111.30 to 112 area. At this point, only a daily close below 108 would compromise this outlook. Aussie dollar. So Aussie gains have stalled out above 76 and just ahead of 77, and we could be seeing the formation of a lower top now below that 2016 high at 78.35, ahead of which could be the next major downside extension. Look for a daily close back below recent support around 75.60 to strengthen this outlook and accelerate declines. Dollar CAD. So dollar CAD is taking its time but continues to show signs of the formation of a major base. A break back above 31.89 will be required to confirm the base and accelerate declines up towards the 135 to 140 area. Only black below 126.55 would negate this constructive outlook for dollar CAD. Kiwi dollar. So Kiwi is breaking down in recent stress sessions after putting in a 2016 high at 73.25. Ultimately, the longer-term trend still favors the downside here, and we could see an acceleration of declines now towards next key support at 69.63, below which would expose more medium-term support at 66.75 further down. Only back above 73 would really compromise this outlook. SPX 500. So the S&P 500 continues to push to record highs, and there's no signs of stalling out just yet, with the market potentially seen extending up towards psychological barriers at 2200. But we have seen technical studies start to stretch, and this could warn of another topside failure ahead of what could be the next major downside extension. Overall, if you look at this chart over the past several years, there are continued stalling out signs of failure above 2100, and we could see that again. Initially, though, we need to see a daily close back below 2150 to potentially get this thing going and put the pressure back on the downside. Gold. So gold has seen some nice setbacks in recent trade, though ultimately these setbacks should be very well supportive, with the overall structure very constructive. Look for some previous resistance now turn support around 1300 to act as a higher low ahead of the next major upside extension beyond the 2016 peak around 1375 and towards 1400 and beyond further up.